Okay, start off. Okay, so weekly market, as I've mentioned, S&P 500 continue to reach a new high, and October is a volatile month. And let's look at the chart where we are. And usually, I love to start with the monthly, just because you can choose 15, 20, it doesn't really matter. But what I like to look at is to show this and give me a reassurance that I'm not being bearish blindly. All right. There is an historical context to back up my whole take on why I feel now is not the time to go long. Obviously, the market will look interesting. The market is going to just continue going higher. So it gives that impression that it's not going to come down, right? You get that feel, especially take a look at this. One, two, three, four, five, six right now. I mean, of course, we're in October, but at least for the last 5 months, it has been continuously going up despite already reaching the ceiling. And when market continues to go up for such an extended period, it builds, whether we believe or not, it builds the feel within us that the market is not going to go down. It creates a sense of complacency for us. So that is what the biggest trap will be for a retail traders like you and me. When you're complacent and when the market is continuously going up and we get overconfident, and that's when things will just go bad all of a sudden. And we will not have the time to kind of like uh, recover or reset our position or trying to manage our position. So that's where the trick is. So looking at the historical context, we can see that every time it reaches this red line, the ceiling, what I call this as like a value channel. This is a discussion for another day. So it reaches here, reaches again, and here we are back at the ceiling, and it's pretty much a good time, or pretty much soon we will see a drop. I'm not saying that it's going to happen tomorrow, but there's a very high chance that it might happen sooner or later. Maybe not by end of this year, but maybe early next year. Because usually before it kind of collapses, there will be some sideways movement because we're looking at monthly, remember? So these are all 4 weeks, 4 weeks, 4 weeks, 4 weeks, 4 weeks. So there will be some sideways movement temporarily before it kind of collapses. So going into the weekly chart, so you can see over here, it has gone up continuously without resetting or any healthy pullback back to the 20 weeks moving average. This is what I also mentioned last week, sorry, 2 weeks ago, that if you ever think at all that you want to take a long position, like want to buy this index or whatsoever, and you got no patience, at least at the bare minimum, wait till the market goes down and touches the 20 weeks moving average. That should be your entry price for now. And if you're gonna look at what's like, those traders who likes to trade quick in and out, then you definitely should not be looking at monthly, weekly, because those are very much for those who are into mid and long-term trading or investing. The other option is the other part, if you're going to look into in and out, here is something that I can share with y'all. Um, so if you look at this, let me just edit the studies. And if you're wondering what platform am I using, I'm actually using the Thinkorswim or TD Ameritrade or Charles Schwab. All three are the same. Charles Schwab bought over Thinkorswim or TD Ameritrade, and that's basically why they all are the same. Now, if you look at this, so this is where if you are a day trader, so you must be very certain what kind of trading that you are planning to do, or what kind of trader you are, what is your objective. So in this sense, if I were to pull this is what exactly is happening right now. So market is moving in this channel. And I always like to keep the support or where the price rebounds for those new who does not know what the support is all about. No worries. So this is where we are at the moment. So you can see that each time we go into this channel, we kind of get here, go up, come back, we go up. So this is the channel that you want to look at. And looking at this channel, if I were to look at it closely, we can see there is still some space for it to go up. But it's not much, I think. Right now, it's going to pretty much open roughly around. You can see the pre-market buy and bid and ask price over here. So that gives it around 670. So 670, that is about here, 670. But there is still room for it to move up to probably 675, sort of, and roughly. So that's where the space is for the market to move higher. So you got to remember something. There is definitely room to move higher, but limited. But if it goes down, it goes south, there's a huge space for it to go down. That is the worrying part about this whole thing. Because if it starts going down and then we are back into the weekly chart, you can see that there is roughly no real support all the way throughout this because it has been just continuously going up without building a solid foundation. You need to build a solid foundation. Like here, this is where it built a solid foundation. So this is a support. That is perfectly correct. And then this is where that you see the gap up. So gap up are usually considered as a support in this sense. So we could see support somewhere around so support is where the price probably will rebound. So this is where the strong support is somewhere around here. And then other than that, this around this region. This is nice to be highlighted in a box. It's easier. So this region. So this is not that strong because it's just a continuation rally and also because it's at the ceiling. So if you want to see a support, probably comes back to around 630. But even then, even if it's a 630, we're talking about about 40 points drop. That's a huge drop. That needs a huge that will definitely spike the volatility in the market. All right. So let's summarize. If you are a long-term trader, if you are a mid-term trader or mid-term investor, long-term investor, now is definitely not the time that you want to go in. You got to wait till at least you meet the 20 weeks moving average. All right. But if you are a day trader or 1 to 2 days trader, you're looking at in and out, then you use the daily chart. And of course, there is space for it to move up by another 4 points, probably 4 points to 6 points. So this is why it's extremely important that you differentiate between what is your trading objective. Maybe today you want to day trade, then you look at daily chart. If you are next day, you're seeing that I'm trying to look for some mid-term to long-term opportunity, then daily chart is not a good chart for you to look at. You may, because it's very noisy. And for mid-term to long-term trading, you don't want to be distracted by all those noisy up and down movement on a daily basis. All right. Okay, so that is basically the market. And personally, if you were to ask me what will be my approach right now, is just pretty much wait and see. Wait for it to retrace and then take the next action. If you ask me when it's ever going to retrace, I wouldn't have the correct answer. I wouldn't know exactly. But if you ask me, will it ever go down to 20 weeks moving average? Definitely. It will definitely move back to 20 moving average at minimum. And that is the point that you want to see for your entry if you want to go long. But if you are a much more safer guy, safer investor trader, then even 20 weeks moving average will not be a right entry point. You got to wait for a more significant drop. So that is something we will discuss another day. And let's just go into quickly. We can just quickly take a look at, I guess it's pretty much everywhere, every index is the same story. We still have room for this to go slightly higher. You can see the lines coming up. So there is still slight room. And you can also look at Nasdaq. So it's definitely has moved up. Again, it's all in at the ceiling of the value channel, this channel that I'm talking about. And it's also at the very much slowing down. You might feel it's going up and up, but the magnitude or the amount it's going up, it's actually going lower and lower and lower. And that is the reason, if you look at the index, even S&P 500 and such, you can see this histogram. If you do not know about MACD, don't worry. This is not something that's crucial. But if you know about MACD, you can see that the histogram is actually becoming shorter and shorter because the momentum in the market, the eagerness for investors to buy is reducing. As we go, it's reducing and reducing. Despite price going up, it's just going up on a very weak, with very weak hands. So there's no real support immediately if the price starts dropping. So when there's no immediate strong support, the price can drop really quickly. Look at this. This is a classic example of when there is no real support, it will start going down very fast. And you wouldn't have time to react, to be very honest. By the time you look at it, by the time you want to decide, you would have missed you would have been too late. That's why it's always better to be patient, to be careful, and don't rush if you are not a day trader or two kind of thing. All right. So that is what S&P 500 is. And October, as I said, about being the most volatile month. And don't forget, this is the next part. It's about Santa Rally. What is the statistics saying? So this is statistics. So if you look at the S&P 500 for the last 75 years, at least up to 2024, you can see that it has been a positive quarter most number of almost many number of the years, like 75 years of data. You can see for October, it has actually gone up 0.76% in average in the last 75 years. October has always gone up as 0.76, November 1.65, and December 1.52. So generally Q4 has been a positive quarter, and it is strongly driven by the Santa rally. Okay, so usually November leads to that rally, and then December is there will be a up move, but slightly limited because most of the people will be on leave. So that is usually the trend. So you can see November is the month where it goes up the most. But remember, October is a volatile wildcard. Sometimes what it means is October might be the volatile month, like from now towards the mid or the third week, then it will start recovering towards the end of the year and still end up clocking a positive month for October. So be careful of that market based on where the market is right now, the chart that we looked at, and based on the usual trend of October. I wouldn't be surprised that there is a sudden drop throughout now, from now to the third week of October, before quickly recovering towards the Santa rally or the year end. Okay, so this is that. And another one that I wanted to share with you all as well is, so these are the number of years in the last 75 years. You can see October has been up for almost 48 years. November, about 50 years, it has been up. December, out of the 75, 50, almost 55 years, it has always ended up being positive. So why is this important? Because one of the way of trading or one of the way of investing is definitely what they call as a seasonal trading. So Q4 trading based on the quarter is also one part of the seasonal trading. And this clearly shows that if you were to go long during the Q4, usually you can end up being profitable. So if I were to mix these stats and also the chart that we looked at, what I'll be looking at is at least for it to retrace to 20 weeks moving average. then looking into establishing some long positions on quite a strong stock, because it comes down, retraces to healthy state, then we know the seasonal Q4 has been positive most of the years. So then that is why I would probably decide to go take some long positions. But when you take a long position, make sure you establish it on a strong stocks, not some uh, penny stocks kind of stuff, because it can be highly volatile. Okay, so that is basically what I wanted to share with y'all. And I also promised I wanted to share with y'all some trading opportunities. So here's one of those trading opportunities that I'm looking at. So either you are a stock trader, or if you are an option seller, or you're an option buyer, either way, this is one of the stocks that you probably want to take a look. And I will quickly share with y'all. If you look at this, so you can see over here, so almost may quite for a very, very long time, you can see here, here, here. So it has always rebounded from this zone. So this is the zone. So this is the zone that you wanna concentrate on. Yeah. So we almost touched it, went back up. That's already showing there's a buying interest at this level. But you may want to wait for it to go down more, at least to a more healthier level, somewhere around inside this box. And this is where you can start looking at a good opportunities to either buy the stock or sell a put options or even buy a call options. That is entirely up to you. All right. So this is uh this is where this is going to be very, very interesting for KMB. I personally own KMB. Let me be very open about it. I personally own KMB, but the reason why I own KMB is because it is a very safe stock. It gives a good dividend as well, some 4+% right now yield, and it has never its volatility is controlled. So that is why I like KMB for like a mid-term to long-term hold. And if I were to look at to probably buy more out of this, and definitely then I'll be looking at somewhere around 120 level, somewhere once the price comes into this box. So you may want to look into KMB once the price drop into the box, then it will be a extreme. So it's very soon it's going to be in there. It's just a matter of time. So you want to keep this in your watch list and establish a trade once it has a good setup. So KMB is always an interesting one. And another one that I can actually share with y'all is this could be quite not for everyone, because look at the start chart. It doesn't look healthy, right? But if it may not look healthy, but it is definitely building a momentum towards the upside. It is actually coming, it is what I say is bottoming. It is trying to establish the bottom of its recent down move. So again, this is not for everyone. Because if you want to go long, you can always choose stocks that has been going up. So that will be the right ones. But if you want to look for some kind of mid to long term opportunities that might give you a return for about 100% that I'm talking about, then this is one of those that you may want to look at as you go about. So you can either sell an options, like put options for this, or you want to buy the stock outright. That is purely up to you. But this is an excellent trading opportunity that is building at the moment. Even if you are wrong, the stock doesn't go like 100%, you are probably talking at least about being able to buy somewhere around 80, 81, 82, and have a rise up to at least to about 130. So that is another room, another opportunity for it to be profitable in this kind of stocks, even at this particular time of the market. So if you are most safe, again, this is all about you establishing what kind of investor you are, what kind of trader you are. If you're someone who's very safe, then KMB will be the best choice. But if you're someone who is okay to take like a mid-level risk, then this TGT will also be a very good choice going forward. You may have to be a bit more patient. Either you buy now, got to wait, and then eventually clock the profits. But there's a very good chance that TGT will at least go from around 80 to about 130 going forward in coming months. All right. So that is about TGT. That is about KMB. So that's two. I actually promised to one, but I kind of decided to just share with y'all two. So that is what are the opportunities that you can actually trade. KMB is definitely the number one choice because of its stability. It's most safe, and it's actually an up, at least in a more of a sideways stock at the moment. TGT, of course, there is an added risk to that because it's more of on a downtrend kind of a stock at the moment. But there's definitely space for it to continue moving higher, and it will happen pretty soon. Okay, there's a clear sign. I can see the big investors have started accumulating their stocks. But how do I know? That's another topic for another day. Looking at the price action, looking at the volume, you should roughly be able to gauge if the big investors are actually have started buying out these stocks. So this is what TGT, this the pattern that I'm seeing in the stocks. That's basically what is showing at the moment. Okay, so that is what the summary of today's session is. First, market is definitely at the peak. There's space for it to move higher, but it's very limited. They eventually will start tracing lower. You just have to be patient, at least up to you wait till the price retraces to the 20 weeks moving average. Quarterly, historically, this quarter has been a bullish quarter, so you might want to take advantage, but wait till it retraces before you try to take advantage of that bullish quarter. And third thing, this is the opportunities that I've shared, which is KMB, Kimberly. If you do not know Kimberly, you most probably will know about Kimberly, and as well as Target. So these two are some of the excellent opportunities that we have going forward. And the market just opened as usual. It has opened positive, building up to yesterday's movement. And just to share with you all, I don't see any questions, so nothing much to address. And just to share with you all, if you can always, if you're not in my Telegram group, feel free to join. I think my team will share the link shortly. And if you do have friends you think that could benefit from this kind of sharing, this kind of stuff, feel free to invite them to the Telegram group as well. Someone said from iPad. I'm not sure your name is iPad, but that's basically what I'm saying. And Alex, yes, I'm on my own. Yep. LJ, welcome, man. Long time no see, definitely. That name sounds very, very familiar, LJ. I'll definitely not forget you. All right, so continue to watch out for my post in the Telegram group. Continue to share with your friends. If you do have any questions, feel free to post them as well. Happy to share, happy to answer them, and enjoy the market. It's a things are going to be a bit more crazy as we go forward in the next 3 to 4 months. But that's basically what the market. Whenever the market goes down, remember that is